Good afternoon and welcome to this week's edition of Halftime Talk. We're delighted to have back at the table Dr. Anas Al-Hajji, Managing Partner of Energy Outlook Advisors. The year doesn't really get started until we've had Anas on the show giving us his outlook for the year ahead. Dr. Anas, welcome back.
Thank you. Thank you.
And no better day to have you than today of the first OPEC, not the first actually, because OPEC has already met this year, but ultimately, as you have published on Twitter, the first time OPEC Plus is meeting facing such a major geopolitical crisis in the world. OPEC Plus with Russia and all those other countries has been around now for a few years, but you've published on your social media feed that this is indeed, they face in essence the first major geopolitical crisis. Why do you point that out? Why is that important?
It is important because the OPEC members, especially the Gulf states, try to walk a fine line in terms of balancing economics and politics at the same time. Now, I know that many officials would like to take politics out of it, but it's the nature of the business. Oil is a political commodity, period. Therefore, they try to balance politics and economics, and all of a sudden now we have a major problem. And with this major problem, we have the following.
Major problem, of course, being Russia on the doorstep of Ukraine, yeah.
Correct. So for the United States, historically, any US administration viewed high oil prices as a threat to national security, to the national American security, if they limit the foreign policy choices of the US. Now with Russia, if the US has, let's say, 4 choices to deal with Russia, and high oil prices limit that to 2 choices, then high oil prices are a threat to national security. And therefore, they will do whatever they can to lower oil prices, if they can. The administration's options right now are very limited. On the other side, Russia historically, as you know from following OPEC Plus meetings, they did not want oil prices to go above $65 a barrel. And they have their own economic reasons for that. But now, with oil prices above 90, of course, they declined a little bit today, but generally speaking, around 90, Russians found out that there is a very lucrative and very valuable political value to high oil prices. Why? Because they are choking Europe choices, they are choking Biden's choices, and therefore they see a very high value in that. And therefore they don't want prices to be lower at this stage because of those reasons.
I mean, it's been a number of years now that OPEC Plus has existed, and Russia has essentially embedded itself as the co-chef of the kitchen. And up till now, the US and other major economies, consumer economies, have fairly been agnostic about that essentially it's nearly like a reverse takeover by Moscow of OPEC, at least certainly veto power, and yet have stood idly by. Was that an error?
It wasn't. The whole issue here is we have the Gulf states right now who might be thinking about increasing production to lower prices because the high prices are not good for them. But now they got stuck politically between the Biden administration and the Putin administration. And the best course basically in this case is just to have a very, very quick meeting, stay the course and ignore everything. You don't even want the media coverage of it. Just let it go. That's the best course for them until
Why are they in such a vulnerable position?
Because they first, if they increase production, Russia might view that as against it because Russia is holding the card of high oil prices that limit the choices of Europe and Biden. So they cannot increase production above what's planned because of that view. But if they don't increase production, the Biden administration is going to look at it as, well, they are supporting Russia now. But they can go back and say, no, we are increasing production as we planned months ago and we are sticking to the plan, and it has nothing to do with politics.
Well, that may be the case, but the reality is, of course, that OPEC Plus are not even meeting their current output agreement of 400,000 barrels a day per month increase. Over the last 5 months since that deal has come into play, it's been quite deficient and fallen short of that goal. They couldn't increase if they wanted to, unless they're willing to eat each other's lunch.
Okay. Well, the last statement is correct, but I think the question itself needs to be rephrased. When I know you are going to ask me about the outlook for 2022 and after, but since you asked this question, let's do this.
Okay.
We cannot talk about the outlook. We cannot talk about 2022 and answer the question you just asked without looking at what happened in 2021. We had some historic development that analysts and journalists overlooked in 2021. And I say historic because they changed the market structure, and therefore they are changing the future in this case. And the first one is exactly what you just said. OPEC, historically, if you look at OPEC alone and later on OPEC Plus, it is the nature of the business when they increase production that some are able and some are not able. This has been going on for a long time. So this is not an issue. What is new in 2021 is that those countries with spare capacity refused to infringe on the market share of those who cannot increase production. This is the new thing, and that affects the market structure of the oil market. This is very important. Why? Because those leaders of OPEC Plus realized that to keep the cohesion among the group, they need to do that. So the idea that they are not meeting their quota in total is not really the right statement in this case, because this has been going on for 40 years. The development is really about the unwillingness of the major producers to take market share from others to keep the cohesion of the group. In a sense, they have to choose between the cohesion of the group, maintaining the group, or increase production. And I think based on what we have seen, the cohesion of the group is very valuable to them. Here is why. The involvement of Russia in the group is not only about crude oil. Russia is OPEC voice in the Security Council. Russia can fight the carbon tax in Europe. Those countries cannot. Russia can fight a currency fight. They cannot. So Russia is very valuable to the group, even if historically Russia did not abide by the quota and they increased production above quota. So
that's a very kind of vulnerable position, as well as a very useful one, one would think. Let's just look a little, go down the path, as you said, on the outlook for 2022. We have a wide range of forecasts from the major investment banks. Citi are looking at a $68 average on Brent for this year, which is just below last year's average price on Brent, which was 71. And then at the bullish end, we've got Goldman Sachs talking about above 100. What's your thoughts on the outlook for the oil price, and how do we get there?
Okay, so let's go back again to 2021 and look at the changes that shaped the 2022 outlook. So first, we have OPEC members with spare capacity are refusing to infringe on the market share of others. The second one is we have seen China, for the first time in history in the oil market, we are seeing what we call in our jargon oligopsony. Oligopsony, when you have a major buyer, a major buyer on the demand side, basically, is able to have market power to control prices through using the strategic petroleum reserves and using quota. So we have another, while the oil producers are not willing to increase production to compensate, China basically is using its power to pressure prices. The only reason why we did not get $100 in 2021 is China. And the third one, and that's related to all energy crises in Europe, China, India, and Latin America, and even Western United States and California. One of the main problems we had, and this is another historic event, is all of a sudden we have those experts who are convincing governments and companies to move towards spot market. And they moved from long-term contracts to the spot market. That was a big mistake, because when it comes to energy supplies, you have to balance the cost with energy security. If you go for the cost, you are going to sacrifice energy security. And
we're seeing that very much at the moment, aren't we, in the gas markets, as countries are struggling to get the LNG that they need because it's all taken up.
Absolutely. So when you look at those major changes that happened in 2021, and you add to them the fact that all of a sudden 2021 exposed the problems of the carbon neutrality policies, where everyone is going back to coal and oil to burn it in power plants, and you add to it the substitution among energy sources that in a way that we have never seen before. You end up with problems in the coal mines, and all of a sudden demand for natural gas increases. It's not enough. You import LNG prices go up. Well, it's the spot market, then it goes through the roof. Now you cannot afford it, you go back to oil. You have one day with no wind blowing, wind power is not there, and you go through the chain again, you end up basically burning coal or oil. This substitution happened in 2021 in an amazing way, which is kind of especially good for university professors who are teaching economics 101. So you add all of those together, and now we come to 2022, what we are going to see. First of all,
we're already seeing it, right? $90.
Correct, but to look at the rest of the year, the issue, the $90 basically is because of the Russian issue. If the Russian issue stops right now, we might lose about $5 to $7 out of that price immediately. 80, 83, well, supported by the market, yes, right now. But here is the main idea. All we need between now and the end of the year, assuming we are not going to have major lockdowns, all we need is about 3.3 million barrels a day to 3.5 million barrels a day to satisfy demand by the fourth quarter. That's
additional supply. Yeah,
correct. Additional supply. And this is oil and liquid. So that's the total. That's NGLs and everything else in it. And you go through the projects around the world and you go through spare capacity. We are more than well supplied by the end of the year. We have no problem in this case.
But you end the year quite tight, wouldn't you? I mean, unless Iran came back. I mean, I think that is the big question, isn't it? You mentioned earlier, as we talked about, whether OPEC plus countries are willing to eat each other's lunch. We've had a few commentators on the last week who are questioning whether indeed the big players in OPEC, i.e. Saudi, UAE, Kuwait, if it is in the group, indeed have that scale of idle spare capacity ready to come on quickly, sustainably. Your thoughts on that?
Yes, they do. Again, let's focus on the 3.5 million barrels a day. Right. Because if the question is about 2022.
Sure.
Yes, they do. And the smart people within OPEC Plus, they already played the game about the end of April. So we might see an influx of oil at the end of April because of the changes in the base year, the base month for the calculations. And the whole deal supposed to end just by, I think by October, the whole deal will end, which means that every country is free to increase production any way they want to after that. And the same way they played the game where they're supposed to increase production and then they either cut the amount or delayed it, they can reverse that and do it in reverse, which means that they can expedite. Yes, they will anger some members in this case who cannot increase production, but if prices are above 100 in this case, there is a justification for them, and the others are happy anyway.
Let's look at that point. I mean, towards the tightness in the first half of the year, and that spare capacity in the major OPEC plus countries. What is your thoughts on the outlook? You say after this program expires with OPEC plus, everybody can pump what they can, what they want. Where is that lack of capex that's come in the last few years. We had the Saudi oil minister over the holiday period of the end of the year saying that as much as 30% of global oil supply could go offline before the end of the decade due to the lack of capex investment. Where is that in all of this equation in 22? And starting with your immediate doorstep there in terms of shale and U.S. production?
First of all, I seriously think without the Russian-Ukraine thing, there is no problem in 2022, and there is no $100 in 2022 based on fundamentals. So based on market fundamentals, there is no support for $100 oil in 2022. Everything you mentioned is going to play after that and is going to hit. But ironically, it's going to hit from a special window that no one is talking about. As you know, I created the hashtag crude quality matters on Twitter. And yes, crude quality is going to hit us so hard because of the lack of investment. So before lack of investment hits us in terms of quantity, we are going to be hit in terms of quality, because whatever remaining oil is not desired by the refiners. So those who are very bullish on oil, they are missing the point. If they want to have a serious case and a meaningful case, they should focus on crude quality, not other things that are like general statement, just saying, well, capex and that's it. It's really the crude quality. If you go through the numbers, country by country and project by project, it's a crude quality that's going to hit us like a rock. And that's going to cause the start, what I call the start of the crisis. After 2022, the bullish case for oil is not about supplies. People are focused on supplies. I think that's the wrong focus. The problem is the failure of the climate change policies, the carbon neutrality policies. Their failure is going to lead to a sudden increase in demand that is not counted for by forecasts, whether the IEA, OPEC, or the major companies or others. In my model, basically, when I do the modeling to 2050, this idea of 30 million barrels that they talked about, the shortage, is correct in a static model. But if you are talking about a dynamic model, we are going to have shortages in the coming decades that we cannot even solve. So by 2035, the maximum we can have a shortage in a dynamic case. Dynamic case means that the market is responding to higher prices. So we see increase in supplies, and we see investors are coming back, banks are coming back. In this case, we are going to see a shortage between 3 million to 9 million barrels in the market by 2030 and after. But the shortage is going to happen no matter what. The other point that people are missing from this equation is that the failure of those policies has nothing to do with solar and wind. And the reason why, because there is no competition between oil and solar and wind in Europe, United States, China, and India, because there is little oil used to generate electricity. The failure is going to come from the transportation sector, because all the data we are getting right now shows that the amount of oil that being replaced is way, way lower than what those people forecasted. And the efficiency that they are counting for is not going to happen, because the low-hanging fruit already happened. We don't see a new technology. We cannot move to lighter metals because trucks and cars will be more expensive. So it is really this massive increase, and not only massive, it's sudden. The sudden increase in demand that is unaccounted for, that's going to cause the crisis.
If we take the more immediate horizon and as being the outlook for US production this year, we had recently a meeting in Houston, a conference where the CEO of ConocoPhillips and the CEO of Oxy disagreed on the outlook for the recovery of US oil production, both conventional and unconventional. We ended last year, 2021, with some reasonable recovery up to about 11.5 million barrels on US production. What's your outlook for 2022, and within that, of course, the continued recovery of shale?
Here is a general statement.
Okay.
The US is going to have another peak, and is going to have multiple peaks. So they are going to break the record again. The issue is when. So it's a matter of time. What people miss in this analysis is the following. The reason why especially small operators did not increase production, because they hedged at a very low price. While the banks and others did not finance them, they don't have enough cash flow to use because prices were low because of hedging. Now those hedges are coming off, and they are hedging at 70 and 80 and above in this case, and they are going to have enough cash flow even to support their operations. But we are seeing private equity back, and private equity right now, basically, if you look at certain companies, they have right now over $60 billion in cash right now, just standing to be invested. Forget about banks, forget about others. We have private equity, and then we have family offices that are interested, in addition to others from around the world, whether from Latin America or China or the Middle East. So there is a strong interest right now with what's going on. And this hedging issue basically will explain why the increases in stock prices of the oil companies, especially the smaller ones, did not keep up with the prices, simply because hedging played a role here. Of course, there is a fear factor anyway in it, but generally speaking, it was the hedges that prevented the increase in production. This is changing, and changing quickly.
The typical, one of the sort of, so many things are becoming outdated now, but the Baker Hughes rig count has always been a kind of a marker for gauging on the recovery of US oil production. Does it continue to be? How do we read the sort of recovery of US production a la rig count in terms of the outlook for 22?
There is, this needs an explanation here. First of all, the rig count stopped being kind of a major component of the production function in 2014. So we need to add other variables. So we have rig count, we have technology, we have spacing, we have other issues that we are looking at, the size of the rigs, everything else that is incorporated into this. But rig count is just only becoming a small component of it. The issue here is this. People focus on what we call the DUCs, that developed or drilled and completed wells, which decline substantially. And those who are very, very bullish on oil, they use them as an indication, oh, we are running out of them. Well, those who know the industry, we cannot run out of DUCs simply because they are part of the operation. When you drill and you want to go through the process, you end up with a DUC no matter what. So the idea of running out is just nonsense. But the idea here is there is an optimal number of rigs, and there is an optimal number of DUCs. And the industry is still learning. We are only 10 years old. The industry is still learning where this optimal number, or where are they? We don't know. We are working on them. I did develop a model where I found out where the numbers are. I think the number of DUCs is still above the optimal. Those declines just means more efficiency. And that's what they mean.
The average productivity per rig in the Permian is also rising, correct?
Yes, but that's also need an explanation, because the way the calculation is made is kind of always questionable. Definitely it is rising, but the way it's calculated make the numbers different. So some people end up with about 1,100, some people end up with about around 1,000. Others end up with about 800. So the issue basically is the way we calculate that. But definitely it is rising, and those rigs basically are bringing more oil online.
And where do you think that leaves US production through 2022? You said new peaks. Is that this year? Is that next year?
No, it's not. The peak is not going to be this year. I think we are going to reach the peak in another peak or another record production in 2023. In this case, probably toward the end of 2023, and we go from there. We are going to have multiple peaks, which means that we are going to see declines in the future. Simply every time prices drop, we are going to see a decline, but we should not write off shale because those guys in the shale industry are completely different breed from what we have seen in the past. And those guys basically are there to make it under any circumstances, and they did make it. And if you look even at the bankruptcies in 2015, most of the bankruptcies basically were in natural gas. They were not even in oil.
Looking into this year as well, Anas, of course, it's a big political year in the US, and the Biden administration has had its somewhat a green energy policy. How does all of that play into this idea of US oil production recovery, new peaks and so on, and the elections that are coming up in the midterm?
Well, we have many issues here. First of all, when operators realized that Biden is going to win, they bought a massive number of licenses, especially on federal land. And if they buy it, then Biden will not have enough power basically to halt those drilling activities, etc. So we have enough inventory of licenses basically to continue the drilling and producing, unless some judge somewhere basically stop these things. So in terms of production increases is going to happen. In terms of green energy, we are struggling right now in several ways. If you look at even the stocks of those companies, they are lower than what they started the 2021 with. So the stocks basically are down while the oil stocks basically are going up. Until now, we have not seen this massive massive growth and profitability of those companies without the support of the government. So Biden basically is really struggling between the policy and the market and the realities of the market. And that's really the bottom line of it.
So in coming up to sort of wrapping up, and that's just to sort of put you on the spot in terms of average Brent price for 2022, average Brent price over the 5 years. What are your thoughts, at least on 22? Where do you fall in the, you said not 100, where do you think the average falls for 22?
It is, generally speaking, when we talk about the, let me speak in terms of ranges, because really
Yes.
one number is not,
Of
not
course.
the right way. I want to clarify one point here because people always keep asking. I have that tweet and which everyone knows about, the sweet spot thread. That got more than 1 million impressions.
Wow.
And a lot of people are asking questions about it. The sweet spot is not a forecast. The sweet spot is 68 to 75 is where consumers and producers are comfortable and where we can balance the short-term market balance with the long-term, with long-term demand, with short-term demand, etc. So it is not a forecast, but generally speaking, based on the current circumstances, excluding Russia and Ukraine, there is no $100. In terms of forecast, 75 to 85, basically, that's what is supported by market fundamentals. Although I seriously think that OPEC should adjust because 85 is still dangerous for OPEC.
In this context of demand erosion, or?
Yes. And well, let me put it this way. If you look back at 2007, 2008, that was the only time in history where we have increasing government spending, increasing military spending, lower dollar, lower interest rate, lower taxes, and increase in incomes. Now we have almost the opposite of that. The dollar is going through the roof, interest rate is going up, taxes are going up, government spending basically is going to decrease in the coming years. So that's where oil become dangerous. That's where high oil prices become dangerous for OPEC. Otherwise, if we go back to the macro situation before 2008, we have no problem.
The one sort of big change you mentioned earlier in passing, and I'm wondering how significant you think it is, just as a closing comment, the outlook for China. Obviously, last year, China oil imports declined for the first time in 20 years. but generally China's decade as being the major magnet of the marginal growth and demand, is that over?
This is really nice finish to the program because we started the program with it. China's oil imports declined because they used the strategic petroleum reserves. Their demand did not decline. So no, it is not over. No, the demand in China is going to grow. And if we have a more peaceful world, and where even trade is peaceful, it will grow again. And we have to remember that China growing at 5% now, in terms of numbers, is way, way higher than the numbers when it was growing at 11%.
The economy is massively bigger than it was,
Right.
Obviously. We have to wrap it up there. Our half an hour is over. Dr. Anas Al-Hajji, Managing Partner, Energy Outlook Advisors. You're a tremendous fella and with incredible insights. I don't think there's anyone really that has the view and the vision and the analysis that you have. So we really thank you for your time today on the day in which OPEC Plus faces the challenge of rolling into another increase. Thank you.
Thank you.